All right, another month is coming to a close, and today I will reveal my top 22 stocks to buy now in October. This list of top stocks to buy started the year with 2024. Last month, I removed Coca-Cola stock from my list after an excellent year-to-date performance. The month before that, I removed Six Flags Entertainment stock from the list for similar reasons. In addition to revealing my top list of stocks here, I'm going to share with you the performance of my list so far in 2024 and compare it to the S&P 500 index. All right, there's a lot to cover in this video, so let's get started after a brief 20-second message for my sponsor.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
All right, so I'll reveal this list in two batches. Let's get started with the first batch, starting with Visa, Alphabet, the Walt Disney Company, NVDA, AMD, Chewy, Target, Nike, Amazon, Micron Technology, eBay, and the Home Depot. And you'll notice along with this list of stocks to buy, I have their forward PE ratios, and you'll see the most expensive stock on this list is Amazon at a forward PE of 30, closer to 31. And the reason I've listed the forward PE ratio is because it's the most important factor in my 6-step factors for investing and making decisions on buying and selling stocks. Valuation is the most important factor. Doesn't necessarily have to be the forward PE ratio. You can use another valuation metric to determine if a stock is expensive or cheap, but valuation is an important consideration. That's because the best business in the world could make a poor investment if the stock price is too high, if the valuation is too expensive. That's why I like to consider valuation along with other factors to determine whether or not a stock is a buy, hold, or a sell. And I've listed the forward price to earnings ratio because it's the most comprehensive figure when evaluating stocks. Now, some of these stocks have outperformed year to date in 2024, and some have underperformed. However, I'll save the comparison of performance for a little bit later in the video. Let's take a look at the second batch. All right, the second batch of stocks includes Snap, Fiverr International, Uber Technologies, Salesforce, PayPal, Meta Platforms, Zoom Video Communications, Netflix, Alibaba, which has been really hot in recent weeks, and UiPath. So that makes the list of my 22 top stocks to buy. Now let's look at performance year to date in 2024. In the performance ratings, you'll notice most of the stocks are positive. In the first list, Nike is the biggest underperformer here at negative 17.7%. Of course, Nike recently replaced the CEO, unsurprisingly, as a result of the poor performance. I reiterated my recommendation for Nike stock and let investors know that I still think the stock is a top stock to buy, even though the company is facing headwinds and a changing CEO, a changing leadership team, I view as a negative in my 6-step investing framework for evaluating publicly traded companies. I prefer a more stable, more consistent management at the top, and so a change at the top is a minus, but it's offset by many other positives that Nike stock has. The best performing stock year to date has been NVIDIA. NVIDIA has done phenomenally well year to date in 2024 and 2023. Of course, NVIDIA benefiting from the rising effectiveness of AI. One of the more surprising outperformers is eBay, which is up 51% year to date in 2024. I remember when I first revealed eBay as a top stock to buy in 2024, I received a lot of pushback from investors who were saying that eBay is dead. Nobody uses eBay anymore. The competition is crushing eBay. And I acknowledged all of those factors. However, I pushed back by saying, you know what? Investors are overlooking the relatively cheap valuation of eBay, along with the very asset-light business model, which has allowed eBay to generate strong profit margins and strong cash flow from operations, while industry competition has been easing considerably. And those are all factors that I view as very positive. Decreasing competition is one of the most positive factors I consider in making a decision on whether or not a stock is a buy, hold, or a sell. Competition can have hugely negative implications for investors. You don't need to look far, just look at the auto industry, the EV industry, how it's been devastated in the last 2 years because of rising competition fighting for the smaller than expected consumer demand. So I try to stay away from industries that are fiercely competitive, like the auto industry. Well, that's one of many factors why I don't like the auto industry. But the industry that eBay operates in is going in the opposite direction. Companies like eBay, Etsy, Amazon, Shopify had all been raising fees and making it more attractive for investors while at the same time making it less attractive for customers. And that's usually a good situation for investors to be a part of. All right, so now that we've seen my list of top stocks to buy, let's compare it against the S&P 500 to see how my picks have performed against the index. The S&P is up 21.33% as of this recording on September 30th. So let's take a look at the portfolio performance versus the S&P. All right, so here I have the list of my portfolio performance. Notice there's 24 returns here because I've added the returns for Coca-Cola and Six Flags, which were up 25% and 33% respectively before I told investors to take it off the list of top stocks to buy. And because they had performed so well already, if I can get 25% on a super safe dividend stock like Coca-Cola, I'll take that any day of the week. Same thing for Six Flags Entertainment, 33% return for a company with lower growth prospects, lower risk profile like Six Flags. I'm very happy with that return. I'll take that and move on to something else. Now, the overall top stock portfolio has returned 20.17% year to date so far in 2024. That's a great year. I'll take that any year. If you were to tell me that I can get 20% return on this group of stocks every single year from now until, 50 years, I'll take that. I'll take that instantly. And I'll take that without even thinking about it. But the S&P 500 has also performed really well. It's up 21% year to date in 2024, which is also a way above average return for the S&P 500 index. So that's great. I love that. If we can get a 20% return and still lose out to the S&P 500, I'm okay with that because we're all making money. It's great news for all investors. So that's good. What I would not like is to underperform and have the underperformance be in the opposite direction, where my losses are, let's say, 20% and the S&P 500 losses are 18%. That way we're all losing and I'm losing more than everyone else. That scenario is the worst outcome. This scenario, I'm underperforming so far year to date by 1.16 percentage points, but it's on the upside. We're all positive. That's great news. I'll take that any day. Longer term, over a 5-year period, I would expect to outperform the S&P 500 index by a slight margin, not a very large margin. I don't expect to outperform the index by a large magnitude because I've said this repeatedly, but if I could outperform the S&P 500 index by a large magnitude, then I probably wouldn't be making videos on YouTube. My goals are to slightly outperform the S&P 500 index while at the same time avoiding disasters. That's one of my main goals in my 6-step investing framework. I feel has been great at identifying disasters to avoid, while at the same time I'm keeping up with the S&P 500 index so far year to date in 2024. Hey everyone, so many of you have been asking about my investing strategy, and I'm excited to announce that I've written a book that's available for sale now that describes my 6-step investing framework for evaluating stocks. I've added the link in the description below.